Alright, so let's talk about investing. A lot of people think you need a ton of money to even get started. They picture Wall Street types with thousands, even millions to play with. But here's the deal, that's just not true anymore. The investing world has changed and it's more accessible than ever. You don't need a fortune to begin building your own fortune. In fact, starting with a small amount, like just $20, can be incredibly powerful. It's about getting your foot in the door and letting the magic of compounding begin its work, no matter how tiny the initial seed. This initial step is often the hardest, but it's also the most crucial for your financial future. The most important thing about investing isn't necessarily the amount you start with, it's the act of starting itself, especially when you're young or just beginning your financial journey. Think about it, that first $20 isn't just $20, it's a statement. It's you deciding to take control of your financial future. It's a learning experience. It's a commitment to making your money work for you, instead of you just working for your money. So, don't underestimate the power of that initial 20 bucks. Now you might be wondering, okay Graham, I have $20, but where do I even put it? This is where technology comes in to save the day, specifically with something called micro-investing apps. These apps are designed for beginners and people who want to invest small amounts of money regularly. Think of them as your friendly guide into the often confusing world of stocks and bonds. No longer do you need a fancy broker or a huge minimum deposit to get started. Your smartphone is your new gateway. Micro-investing apps are brilliant because they make the process incredibly simple and accessible. You can download them onto your phone, set up an account in minutes, and link your bank account. Some popular examples you might have heard of include Acorns, Stash, or Robinhood. So, how do these micro-investing apps actually take your $20 and put it to work in the market? It's not some complex, hidden sorcery. It's actually quite straightforward thanks to modern financial technology. When you deposit your money into one of these apps, you're typically not buying individual stocks directly in the old-fashioned sense, especially with very small amounts. Instead, the app often pools your money with that of other users. This collective pool then allows the app to purchase a variety of investments, giving you a piece of a much larger, diversified portfolio than you could afford on your own with just $20. Many micro-investing apps guide you through a simple questionnaire when you sign up. Based on your answers, the app will then suggest a pre-built portfolio for you. Alright, I mentioned ETFs or exchange-traded funds, and they are a fantastic option for beginners, especially when you're starting with a small amount like $20. So, what exactly is an ETF? Think of it like a basket that holds many different investments. Instead of buying shares in just one company, when you buy a share of an ETF, you're buying a tiny piece of all the companies or assets held within that basket. This could be hundreds or even thousands of different stocks, bonds, or commodities, all bundled together into one single tradable security. The main advantage of ETFs for someone starting with $20 is instant diversification. If you only have $20, buying shares in multiple individual companies is pretty much impossible, as many single shares cost more than that. But with an ETF, your $20 can be spread across a wide range of assets. This significantly reduces your risk compared to betting all your money on one or two stocks. Now, let's dive a little deeper into something I touched on earlier, fractional shares. This concept is a real game changer, especially for those of us starting with smaller amounts like $20. Traditionally, if you wanted to buy stock in a big company, say Apple or Amazon, you'd have to buy at least one full share. The problem is, one share of some of these popular companies can cost hundreds or even thousands of dollars. That price tag would immediately exclude anyone trying to invest with just 20 bucks. Fractional shares completely demolish that barrier. As the name suggests, they allow you to buy a fraction of a single share. So, if a share of company X costs $200, you don't need $200 to invest in it anymore. With fractional shares, you could invest your $20 and own 0.1 shares or 1/10 of a share of company X. This means you can invest in the companies you know and believe in, even if their share prices are high. Alright, so you're convinced. You've got your $20 ready, and you understand the tools like micro-investing apps, ETFs, and fractional shares. Now let's walk through the actual steps to make your very first investment. It's simpler than you think. First, you need to choose a platform. This will likely be a micro-investing app or a beginner-friendly online brokerage that offers low minimums and fractional shares. Do a little research, read some reviews, compare any fees, and pick one that feels right for you. Look for ease of use and good customer support. Once you've selected your platform, the next step is to download the app or visit their website and sign up for an account. This process is usually pretty straightforward. You'll need to provide some personal information like your name, address, date of birth, and social security number for tax purposes in the US. This is standard procedure for all financial institutions to verify your identity and comply with regulations. Don't be alarmed by this. It's a necessary part of opening any legitimate investment account. Okay, so you know where to invest your $20, but the big question remains, should you actually invest it in? This can feel like the trickiest part, but for your very first investment, especially with a small amount, the goal is to keep it simple and focus on learning and building good habits. For most beginners, a broad market index fund ETF is an excellent starting point. These funds offer instant diversification at a low cost, as we've discussed. Consider an ETF that tracks a major index like the S&P 500, which represents 500 of the largest US companies, or a total stock market index fund, which includes an even broader range of US stocks, including small, mid, and large cap companies. By investing in one of these, your $20 is spread across hundreds or thousands of companies. This means you're not relying on the success of a single company. Instead, you're betting on the overall growth of the economy. Now let's talk about why consistently investing small amounts like that $20 is so incredibly powerful over the long term. It's all about a concept called compound interest, or as some call it, the snowball effect. Imagine rolling a small snowball down a snowy hill. As it rolls, it picks up more snow, getting bigger and bigger and moving faster and faster. Investing works in a similar way. Your initial $20 is that small snowball. As it earns returns, those returns then start earning their own returns. It's like your money starts making babies, and then those babies grow up and make their own babies. The key here is regular investments and long-term. That first $20 is just the start. The real magic happens when you make it a habit to invest small amounts consistently over many years, or even decades. Maybe you commit to investing $20 every week, or $50 every month. These small, regular contributions add more snow to your snowball, continuously. Even if the individual amounts seem insignificant at the time, they add up substantially over a long period, especially when combined with the growth from compounding. So, we've covered a lot. We've seen that you don't need a fortune to start investing, that just $20 can be your entry ticket. We've talked about micro-investing apps, ETFs, and fractional shares, all tools designed to make investing accessible to everyone. We've even walked through the simple steps to make your first investment. The most important takeaway from all of this is that the best time to start investing was yesterday. The second best time is right now, today. Don't let procrastination or the feeling of not having enough money hold you back any longer from building your financial future. The journey of 1,000 miles begins with a single step, and in the world of investing, that first $20 is your single step. It's about more than just the money, it's about building a habit. The habit of regularly setting aside a portion of your income, no matter how small, and putting it to work for you. This discipline, cultivated early, will serve you incredibly well throughout your life. It's the consistency of your contributions, month after month, year after year, that truly builds wealth over the long haul.